Hello guys, glad to have you on board again. Today we'll keep on doing the same old job each and every day, trying to figure out what is relevant out of what happened the day before to see how we can forecast the day to come. Still nothing to do about cryptocurrencies, still absolutely no changes. We're just dying in here, waiting to see if a range can build itself, and possibly if we can hold that range in the top 50% of the daily trend channel that has now reversed bullish. So it's the 4-hour context, and as you can see, we've now reversed it, and as long as we stay on top of this, I would suggest we pretty much have a bullish bias, but still requires a pretty quite some time, as basically in here it takes a week to complete those boxes. So the next box will just show up a week from now. So this is exactly how it's going to be, and I would pretty much like to just oscillate in between, and as much as possible would be nice to have a close back into the context, even if it has to be rejecting one more time. I mean, I would like to have something like that, okay, and even if that means this coming out right after, I mean, just if we can do that and then that, it will give us a pretty much bullish bias to go higher afterwards. I don't think we're nearly going to correct pretty bearishly. I think the worst we could do is to get to that 50% area, which we shouldn't. Normally we shouldn't get there, but we could do something like that, like an ABC kind of correction. Would be possible, but for now I think I'm just waiting to have something. So let's say that the interesting areas in which you want to put your alerts on the intraday basis is most likely in here, 150. Obviously those who do intraday trades will like to trade this area with shorter time frame signals and a context that may be playing in here. So probably 15 minutes is going to have a context in there, just to give you odds about how to apply this strategy. Yes, so 15 minutes is going to be in context in here. So as you can see, it's pretty much a range, so you're going to wait for the market to break through the context, give a signal and a triangle to follow near the 150 area. If such thing happens today, then you can pretty much try to trade that bearishly though, so it's counter trendy, it's against the major trending. So if you do that, obviously you lower the leverage at least by 2, because trading counter trendy in a range could be very dangerous. Other interesting area, so trading the 50% area, it's basically, all right, so it's not trading at 150, it's more likely in the area of 150. If you do have 15 minutes range signal, then I suggest you can take them. The second boundary I would say is there, 123, it's the 50% of the overall context. And I wouldn't trade the support in here, the trend support. So I would say if we go back to support, it's probably to take down prices back to Fibonacci level, and in an area suggesting that we've got probably prices to trade as well in this area. So it's either we go there or there, and in here we're basically halfway through, so it's definitely uninteresting prices you shouldn't even care about. Alright, so that's it for cryptos. I basically have nothing else to tell you guys, I'm sorry, but that's all I can do. We have to talk about conventional markets. So we do have a kind of a pullback, reversal, call that however you want, but we've got rising VIX. I expect the junk bonds to be bearish today. We've got bearish SPX, we've got bullish yen. So finally the risk clusters are showing themselves. USD/JPY is reversing bearish once again, and the yen, all the yen pairs are heading to the south. GBP/USD, Euro/dollar heading to the north. So the dollar is suffering some losses, and that was pretty much what was expected. All I'm caring right now is to see the Euro/dollar gaining some strength. It's been the weakest, so definitely for some understandable reasons. Because everybody is pretty much expecting that after dealing with China, even though it's still not done, after dealing with them, we definitely know that Germany is going to be the next in line. So it kind of pain trades the euro area, in which we suffer from this, and we're still suffering from the uncertainty surrounding the probable TLTRO that we could have along the way, because the ECB is playing like the Japanese bank, who's basically now we're ready to go all in, and as long as necessary. So it's a dangerous activity. I still stand for this, but the market is somehow buying this, or more likely selling the euro, even though I think, to me, the euro is going to wrong for this. No matter what Draghi said, I think Draghi is pretty much going to leave by the end of the year, and at some point we're going to shift and forecast a shifting in there, because it's not just about Draghi. The market pretty damn likes Draghi, that's obvious, but lots of things are about to change in the ECB, and I suggest that if we do head into recession kinds of or recession-like kind of economies, or close to recession economies, most likely it would be the right word to use. We're not necessarily going to enter recessions, but we are close to, and definitely this has to be priced in. We probably currently price that well. I would suggest an additional 5 to 10% losses on the euro area would be close to reality, which is pretty far from what we're doing right now in Wall Street. So I would say we do have some rational pricings in the euro area. Therefore, selling in here wouldn't necessarily make sense. But everybody will do that. It's simple as that. I mean, everybody just... most traders don't even think. They're just following and pushing the existing moves further away. They basically do some stupid trading like, okay, who's the weakest, who's the strongest, so let's buy the strongest, let's sell the weakest. It's exactly what most people are doing right now, which we call momentum trading. And that's the worst, because it's just dumb reactions in which normally the market isn't there to trade. Some people call that trading with memory. Normally you shouldn't be doing that. You're supposed to find the average and decent pricing for every asset, what we're doing in here is pretty fucking different. It's like robots who've been told to buy the strongest, sell the weakest, as long as the party goes on. And I mean, that makes no sense, because this is basically what's been creating all those excessive pricing, on top of lots of retail traders who've been told to buy for stupid reason, at least the way I see this, and future will tell us. But still, the US is still a pretty big mess, because we've got a conjunction of elements suggesting everything is a bright side right now, but I tend to see the dark coming along the way, and it's after seeing bright and dark that we'll assess the shaded grays. What actually is the reality of the US economy? It's only when they fail that we'll have something to play with. So basically waiting, we've got a timing, and the euro dollar is going to be interesting. I would pretty much like to see euro dollar heading back to 114, in which we've got a very low volume area. So this is definitely a polar area, in which in here, if we manage to set ourselves on top of that, then we'd definitely be able to validate once and fucking for all these damn bottoms that have been lasting for way too long. But definitely I would be happy to get the hell out of here, because that will mean the trend will emerge, and I will be on the right side with not the best but good enough prices out of speculative area, which means I'll be able to forecast the trend and play the breakouts with some leverage and not so much risk. But for now, patience. In here, we're definitely not trending. We just managed to rise or back to the positive area of that trend channel, but that trend channel is still bearish. So in order to give some clues that this market is bullish, then we need to get to the resistant context and push through. So getting in here, breaking the low volume area, and pushing that market to test the further resistances. We've got one in here, but I don't think it's nearly going to resist. It's just going to be partial profit taking. So the bulls in here will probably lock on some gains, and we're just going to have some pullbacks or something like that. So validation is in here. Breakout, first breakout trades to me will be there, and until further notice, remain patiently waiting. It's definitely wave 1, wave 2, and wave 3 to come. So it's expected to reach out breakouts up to 1.1718 area, in which first lock-on profits could be done, a partial profit taking, only to buy again if any pullback is offered. That's pretty much it. So I remain bearish. Oh yeah, Tesla, we got to talk about that. So surprisingly, SEC is attacking or doubling down back on Elon Musk. I saw the market opening with a bearish gap, and I said, oh yes, we're gapping down and we're gapping below supports. That's good. So what I've done is basically reinforcing, lowering my stop losses, and God knows why, but it didn't work out. So it's pretty awful, and I would like to see, I don't know, let's put that in context. So I think it's Control N, so it's TSLA investing. Let's see how they price. Oh, they still have an average pricing. All right, so we'll see about that, but I expect Tesla to give us some clues today. So today's trading session is something I'll watch out for in Tesla. Either we have a bullish bias, and for some reasons we managed to break up that resistance trend line, even if we've made 3 impulses. I mean, you can see 1, 2, 3, okay? So it means either way, to me, stop loss can be set there. This is where my stop losses are. I put in my stops in here to be in here, just on top of that resistance. And it's a gain, stop gain. So I still have a little bit of money available to eventually reinforce if we were just to try breaking it down, just to go again. So I'm waiting for the market to go back to this support area and break it down. Anytime we break this down is where the carnage will start playing, because if you have a look at the daily chart, look how fucking mature this trend is, this range is. We have no signs of poles. Oh yes, we had one back then. Okay, so that's the only time we managed to break twice in a range, which is rare, and we've only done that to the downside. So okay, range maturity, first top, bottom, another top, so bottom again, top, bottom, top. So you obviously have to delete that in between. So as you can see, it's 1, 2, 3, 4, 5 bounce out of this range. I definitely never thought we would support in here, but we did. But we still rejected the resistance once again. So it's still bearish as we are so far. Next stop is to try breaking the context and see how we survive. That's basically it. Okay, it's definitely a range, so no one knows how it's going to end, neither do I. All I can tell is that I pretty much would like to be bearish on Tesla, but I could be wrong, and if I'm wrong, it's not going to cost me $1. At this point, I'm safe because I've done pretty great speculation in here, catching the exact top, so I've been able to reinforce, even though could be a mistake. I mean, yesterday shouldn't have rised again, so I was pretty much surprised to see this happening. So we'll see how it goes today if we just fall apart. So validation and true breakout trades, low risk breakout trades will be done in here when we reach back to the support trend channel, which is bearish trend channel. I think we're going to accelerate through this. It's basically, we reject, and bang, we surrender. All right, and remember the key dates. 1st of March, we're going to have some obligations to pay for in the some coupons to pay for from Tesla, and they don't have enough money to do so, so it's going to be another bond emission necessary going to happen, and I pretty damn wonder how high the yieldings will be in the actual context, because if we're heading there with an, let's say, mixed bias on the US equities, plus some issues with Elon Musk. I mean, it's hard to say, but I think the bond traders will not necessarily give a high grade to Tesla. Not necessarily saying this will turn down to be a junk bond, but it could be. I mean, at some point, Tesla is definitely what should be set as a junk bond. It's just that as it's a big cap, then some people just don't. It's easier to find money when you have a lot of market cap, a big market cap. So I don't think Tesla is ever going to be a junk bond, but in a structural perspective, if that company wasn't that big, it's definitely the kind of things that will be a junk bond. So we'll see. That's one of the many reasons that basically drive me in the idea that this thing will go down, because it's pretty fucking much overpriced. Even though yes, Tesla has a future. I'm not thinking it's gonna die. I'm just thinking it's way overpriced and shouldn't be that high. At least not in the current stage of productions and things like that. They have big dreams, and this is basically what the guys are paying for. But that's what you pay when the market is dreaming. When the market will go back to reality, I think Tesla is one of the stocks that will suffer from that reality pullback. That's it. Let's have a look at Amazon. Amazon's going to be interesting in the next few days. Anytime, same thing goes here. Anytime we reach back to support area, problems will be down the road. We could have another rise. That's still possible. I still don't know what the hell's going to happen with the US. It really is like the two options are possible, but I still stand for what I said and what I trade. Switching in here is not an option. So if you have been wrong, then just take a stop loss and move on. We'll try again the next time. If you think you've been wrong and you're switching, definitely it isn't going to work anyway in the future. All right, so I'm going to leave you guys with that. So I would say today, watch out for the dollar. It's pretty much interesting, and we have early signs of a trend to come. So the dollar may be breaking down pretty soon. So to me, I'm fully exposed in here. Okay, so I'm maximum speculative leverage. I'm waiting for the breakout to be visible on the chart. So I want to see a breakdown candle that breaks down those supports to eventually lower a little bit more of my stop losses and take an additional reinforcement. Until then, I just do nothing. So I want a candle to close below the trend channel and below those two supports to put an additional eventual reinforcement. The yen index is validating a bottom and an ABC correction. It's been long as well in here, but here we are. Trend channel, support areas, signals, everything we needed to confirm this trade. It's not confirmed, but to confirm the odds are now favoring the bulls. So we'll see about that. We'll see how it goes, and so far so good. I would say validation when we reach out to halfway the trend channel, and obviously we're going to have a positive bias to break through the next time, as we'll have built higher lows, and therefore we'll have what we need to fucking trend. So we'll see how it goes. I still tend to believe that the yen is going to trend on the next bullish wave, and I definitely want to be in that. So still speculative at that stage. I mean, on this time frame, it's still speculative leverage. If you are leveraged already, then you and I have a problem, because you shouldn't. I think the stop losses must be set below those low for now, and as long as it isn't been proving wrong. We've got a positive bias as well on the RSI in here. We clearly see that we've broken the trend line. So I would suggest we're going to break, and the yen could be rising a little bit more than that. Watch out for the euro area. It's definitely reversing in here. Not necessarily just going to die in here, but we're failing the 38% fib with a signal. And therefore, it's interesting. But as I said, to me, in terms of risk-reward ratio, I think selling the euro area to gain a 10 to 12 to 14% maximum, because I don't think we're going to nearly do anything more than that. It really is my maximum target for the euro area, and it's a 15% drop, where I think the euro area, the US area could just do a 25 to 30% drop. So for the same amount of risk, why the hell would you just sell a very late stage trend? But you need to be aware of this. Lots of traders will just do that, because they do what? They will sell the weakest and buy the strongest. So what they do is that anytime we have a bullish cycle, they're buying the US. Anytime we've got a bearish cycle, they're selling the euro area. But this is definitely something that will reverse. This is a correlation system. So let's just have a look. And it's been a while since I've done that. So yes, we're going to do it again. Let's do the German DAX divided by US 30. So the Dow Jones. Yes, let's do that. All right, so let's see how we are in this thing. It was, what the hell was that? Oh yeah, okay. So that's it. So I know it's not necessarily what I've seen back then. Oh yes, yes it is. So we've gone pretty fucking far. I mean, I never thought we would be there. Those who remember that chart, I said back then that in here we probably would find a bottom. So in here, don't figure out the analysis, even though the framework in here is pretty wicked. I mean, yes, they're doing a pretty good job. I would never, I mean, yes, nice sweet bottom in here, profit taking, triangle, and context over in an oversold context. In here we got the resistance, no signal, but no signals. It's kind of great. It means in here we're very stretched in terms of US to Euro area decorrelation. Okay, consider this as a correlation between the US and the Euro area. Now we're going to do this in another perspective. We're going to do this Eurostoxx 50. It's SX5E. Yes, SX5E. And we're going to divide by SPX. God damn it. All right. Oh god damn it. See this in a monthly perspective. Euro area versus US area. It's definitely all about the US for more than 2 decades. And this is very late stage trending that we have in here. Sorry. Exit signal. Let's see what it goes in the weekly chart. I'm pretty bet that we're going to have unfolded boxes pretty soon. So it's a very late stage trending. You can very well see the wave 4 pullback. So I would say, oh god, wave 3, breakdowns, everything we need. Very extended trend. Wave 4 pullback. So we're wave 5 trending. We should have been buying in here. We had a signal. It didn't work out. So in here, oversold is another buying area. So didn't work well the first time, but we would have secured the trade second time. So what I would say is that it's about time to favor the euro right now. So what that means rising is in favor of the euro area, selling is in favor of the US. So we should reverse this thing. The guys who are still playing that stupid game, they're doing very late and dangerous kind of trading. And we're talking about weekly in here. So it's not necessarily something that would just reverse today or tomorrow. It's just something that you need to bear in mind that for the years to come, at least for the quarters to come, euro will be favored from the US. So if you have a bullish bias, a bullish perspective, why the fuck would you buy the US? This is not the US you should buy the euro area instead. And if you want to sell something, then don't sell the euro area, sell the US. To me, it really makes sense, because if you trade what's happening right now, definitely you're going to say the opposite. If you trade what's to come, it's my fucking job to forecast what's about to come and what's the most probable to come, not taking and talking about what the hell is happening right now. I don't give a shit about that. I want to get in a focus to build myself safely ahead of the next move to come. So I definitely tend to believe that as this is pretty fucking late stage and very mature trending, we might expect some range to come and then retracement. So you put your Fibonacci retracement in a monthly perspective. The first Fibonacci retracement is in here. And oh gosh, that's pretty far from now. So I suggest this is what we could do. Okay, a 28%, 23% retracement. That would just push us back to 2015 levels, which is pretty much nothing. I mean, it's just retracing to wave 4. So this trend remains bearish, but this is not about time to follow it. This is actually the conclusion I want to get down to. Following those trends is just stupid, as those trends are freaking late stage and very mature. So it's more likely about to speculate against those trends to just trap those who've been playing it too long. We've got the signals, got everything we need. I mean, basically, yes, to me, this thing is dead. It's about time to trade against the guys who keep on trading this, because they're doing it very dangerously, and I want to take their losses if they still do it. All right, so to be honest, what does that mean if I just translate this? If I tell you euro area is going to be favored out of US, it means euro dollar is just supposed to surge as well. So we could be changing the way euro dollar has been priced in a monthly perspective. And like I said, normally in here we should have a bullish bias. This thing is bullish in the overall structure, and I still tend to suggest that the spread betting between US and euro area should be seen as well in euro dollar. Not necessarily mean that we're going to straight trend in here, but I suggest reaching out to the monthly resistant context. It wouldn't be a normal. So it's getting back to not necessarily 1.40, but I would say yes, 1.35 at least, to try testing something higher. We've got to stop hunting in here, suggesting we could just try to go in here, take down some stop losses, and see if we can break higher. I don't necessarily think we will. In here, we really require the dollar to be shit. It's a possibility. Once again, they've been piling up the risks and acting like there was none. So it's a very dangerous behavior, but so far so good. It's been working. Like I said, I'm not betting on this so far so good. I'm betting against that, and future will tell if I was right or wrong. But I still tend to believe this is one of those trends that you don't want to follow. That's definitely all I can tell. You can try to fight with a decent risk-reward management, but that's all we can do. Don't follow the trends in the US. Way too dangerous. It's a dumb catcher. It's definitely something that's just going to be there like, hey, come to me. Come invest your money into daddy. And obviously, whenever I see that, it's never going to end well. And all I can tell is selling is speculative, but buying is definitely not an option. All right, I'm going to leave you guys on that and wish you a good day. So be really cautious with intraday trades in the meantime. The US are really a pretty sad bitch. So unless that market managed to really and truly validate a reversal today by breaking down a support, intraday support, then please don't be too aggressive. We need to break this down to be truly confirming something. You can definitely take that trend line in consideration. So I would say getting back to there, we've got support volume as well, could be making sense in a 1 hour perspective. So just letting it go until then. And I would like this to be a wave 3, okay, kind of a wave 1, 2, 3, 4, 5. This is what I would like to see, okay? So getting to that trend line, breaking down that support could be a pretty nice prospective in here, okay? So building a bottom out of those two bottoms protection to terminate wave 3 and break down this support, wait for a wave 4 pullback, and normally a little extension should be expected afterwards. So that's all I have in some intraday basis, and I cannot forecast anything going into the lower time frames than that. I mean, 1 hour is the least I could do right now, but don't go below that. It's way too dangerous. I'm trading 15 minutes right now in a market that doesn't even know where to go itself. It could be highly dangerous, especially for beginners. All right, bye guys, see you tomorrow.